Let's talk about how much you really need invested to live completely off dividends. Now, dividend investing, from my experience, is one of the best methods to generate true passive income and allow your money to work for you with a lot less money invested than you might even think. But in this video, we're going to go over why I think investing in dividend-paying stocks and ETFs is the best method to get to retirement and potentially even retire early. And then later on in this video, we're going to go over multiple different methods that you can use to get there. But maybe most importantly, stay tuned until the very end because I'm going to reveal my dividend growth portfolio that's worth over $500,000 to show everyone exactly which stocks and ETFs I currently hold. Now stick around because we have a lot to go through. Right after you, please drop a like on this video and subscribe for more future content like this. Now, in regards to retiring completely off dividend income, the first thing we're going to need to figure out is exactly how much money we're actually going to need to live off of. And according to SoFi.com, the average cost of living in Florida at least is around $50,000 or $51,000 per year. So in theory, if we can build out a portfolio made up of different stocks or ETFs that generate over $51,000 per year in dividends, in theory, we would be financially free and we could use the dividends to pay for our bills and spend the rest of our lives doing exactly what we want to do. So now that we know exactly how much money we're going to need to earn in dividends per year, going over the simple math on how to figure out how many shares of whatever stock or ETF we're going to need to purchase in order to get there. So the math is really simple. If you take Apple, for example, Apple has an annual payout of around 96 cents in dividends on a yearly basis. And the math from there is very straightforward. In order to live completely off dividends paid from Apple stock, for example. And again, this is just going over the basic math. We're going to go over different strategies in a second here. We would take $51,000, which is our goal of dividends being paid per year, and divide it by 96 cents. So in theory, an investor would need around 53,125 shares of Apple stock in order to completely retire off the dividends paid. Now, Apple stock is currently around $171 per share, more or less. So that means an investor would need $9,084,375 invested into Apple stock in order to completely retire off the dividends being paid. But just 1 second before you start to get concerned and say things like, there's no way I'm ever going to be able to buy $9 million worth of a stock or ETF because that's just an outlandish amount of money. Luckily, throughout the stock market, there's different ETFs and stocks that all have different opportunities and that definitely have different amounts of dividends being paid on a yearly basis. So take SCHD, for example, the Schwab US Dividend Equity ETF. Now, although this ETF only has a 3.53% starting dividend yield, this ETF does have some massive dividend growth, which basically means that over time, by holding onto this ETF, it's going to pay you more and more. At least that's exactly what it's done historically. For example, back around 10 years ago, this ETF was paying investors around 25 cents per share per quarter. Now, fast forward 10 years later, if you were holding onto that same exact share and just didn't sell it, just kept holding onto it, you would be getting paid around 70 cents per share per quarter, or almost 3 times as much. So what's pretty crazy is that if we were to look at SCHD for an example and plug in some of the numbers into a dividend calculator, with a $10,000 starting balance and $12,000 of annual contributions, reinvesting all the dividends along with the massive annual amount increase of dividends being paid, which is the dividend growth rate. Investors would start off with a very small portfolio, but as you can see here, about 20 years in, just off of the numbers we went over, an investor in theory would already be earning about $50,000 per year in dividends. And of course, keep in mind, if you were to start out with more money, if you were to add more money on a yearly basis, these numbers are only going to get bigger and compound much quicker. But now let's go over even a crazier example of how an investor can retire off dividends with much less money than they might think. So take JEPI, or the JP Morgan Equity Premium Income ETF. This ETF has a current yield of around 9.69% and pays out around $5.35 per year. So back over to the calculator, if we take $51,000, which once again is the average amount of living expenses someone has in Florida. Again, the living expenses are also going to change depending on how you live, where you live, etc. But going off of these numbers, $51,000 divided by $5.35, which is about how much a share of JEPI pays out yearly as far as dividends. An investor would just need around 9,532 shares of JEPI, which currently are valued at around $50 or so per share. So an investor would only need $476,635 in order to retire early and have the dividends cover all their bills and maybe even more. But what's even crazier is that there are other option income strategy ETFs out there, like ticker symbol TSLY, the YieldMax Tesla Option Income Strategy. Now, this ETF trades options on Tesla and generates a massive amount of dividends on a monthly basis for doing so. At least it has historically. The TSLY ETF has a 52.63% trailing 12-month dividend yield and has paid around $7.36 in dividends over the last year. And keep in mind, $7 in dividends for a stock that's only $14 per share. So back over to the calculator, this is definitely going to be the craziest one of all. If we take $51,000 and divide it by $7.36, an investor in theory would need around 6,929 shares of ticker symbol TSLY in order to have the dividends cover their living expenses. Now, because TSLY is around $14 per share right now, an investor in theory, again, this is all just in theory, would need around $97,000 invested into this specific TSLY Yield Max Tesla Option Income Strategy ETF in order to completely retire off the dividends. But just 1 second before you go ahead and say, well, TSLY doesn't pay the same amount in dividends on a monthly basis because it is a covered call ETF, and based on the strategy, it's going to pay a different amount ongoingly. You would be 100% correct in saying so, which is exactly why I personally would never do something like this. I would never invest a massive amount of money into something like this and try and live off the dividend. Because as you see, the monthly paid dividend is just a little bit too sporadic. And for me personally, I'd be much more comfortable with investing into something like the Schwab US Dividend Equity ETF that has a much more mild strategy and that does have a history of paying much more consistent dividends on a quarterly basis, even if they are much smaller relative to something like TSLY. But it just does go to show that whether you're going to invest into something that has a high dividend growth rate like SCHD, or invest into something like JEPI that has a nice, healthy starting dividend yield, or maybe you even want to invest some of your money into something a little bit more risky with higher risk, higher reward, like the Tesla Option Income Strategy ETF. There's so many different ways to get to the point of retiring early these days with the stock markets, and in my personal opinion, which you're going to see here in a second, I like to be a little bit diversified and have a little bit of everything throughout my portfolio. But now, just like I promised, this right here is one of my largest dividend growth portfolios that's made up of around 53 positions. I have really high quality stuff in here, like 1,000 shares of Apple, we got 883 shares of Realty Income, and every single stock or ETF in this portfolio for the most part pays a nice starting dividend yield and or also has some nice dividend growth. And as you can see right there, the portfolio value is currently at around $503,000, which fluctuates quite a bit on a daily basis. So even though we went over various strategies today of how investors can buy into different stocks or ETFs to get to that number, the number of retirement, which in this case for the video's sake, we use $51,000 in dividends per year. Building out a portfolio that's very diversified, has a little bit of everything, some high yield, some lower yield, some higher growth, maybe some lower growth. To me, that's been the strategy that I've been using over the past 7 or so years, and I've been able to build a pretty high quality portfolio up to this point. Now, building a portfolio and living off the dividends simplifies the path to early retirement by providing a reliable passive income stream that also can grow over time. And what's awesome about dividend investing, no matter what your strategy is, by starting early, diversifying your portfolio, and making strategic investment choices, we all have the ability to achieve financial freedom as long as we stick with it. When it comes to building a long-term dividend growth portfolio that could be used for retirement, are you personally more interested in a low-risk, slow and steady pay strategy, or more of a higher risk, higher reward strategy? Comment down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.